I have said before, and I would repeat it again, if it's not going to zero, it's going to a million. It's either nothing, right? If it's nothing, then it's getting scrubbed out and banned. And of course, we now know that it's not getting banned, right? There's no way that Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this, right? They're not endorsing a tulip bulb, right? So once you go from 0 to 1, then the question is, okay, well, it's an asset class. If it's not going away, then what's it worth? Well, it's worth 1% of the assets in the world. So 1% drives it up by a factor of 10 to 20, right? Once you get to a 1% exposure. The recognition as an asset class is a big deal. The availability of a spot ETF is a big deal. The normalization of accounting via fair value accounting, which is the FASB initiative, it's another big deal. And then the halving is a big deal. So those are 4 pretty serious milestones that we're staring at right now. And I think Wall Street and the general community is kind of just internalizing this all in a short period of time. And that's why the bullish outlook. So you're a normal person and you want to save money for retirement or to give to your kids. So you put it in a savings account, you get 5% interest. The monetary inflation rate is 7 or 8 or 9%. You've got a negative real yield of 3%. If you end up with a negative real yield of 3.5%, then over 100 years, $1 million saved is worth $30,000. Okay. And so for the average person, saving money in bonds with a 3.5% or 4% interest rate when the currency expands at 7 or 8, that's a losing proposition. You lose 97% of your wealth over the course of 3 generations. So clearly bonds, they don't work, right? And savings accounts don't work. So the next question is, do I just put all my excess money in the S&P index? Well, traditionally, the money supply in the US is expanding at 7% and the S&P index is going up at 7%. So if you save $1 million over the course of your life and you put it all in the S&P index, then in 100 years, it'll be worth $1 million. So that's wealth preservation, but you're not doing any better than that. And that just kind of assumes that the S&P 500 is going to be relevant for 100 years and you can stick around the country. But it's like treading water. The next issue is, well, so what I put in real estate? If you buy real estate, you're an average person. Can you buy a building? Probably not. Can you buy a warehouse? Not easy. Maybe if you're a rich family, you buy warehouses, right? Rich families buy warehouses, city blocks, and buildings, but the middle class person doesn't. So how do you buy $4,000 worth of a building? Can't. Okay. So the issue there is your property rights are inferior when you're buying shares of stock or a security versus the underlying property. If you own the building, you can mortgage the building, sell the building, upgrade the building, build 10 floors above the parking lot that the building has. You can develop the building. When you own a share in a REIT that owns the building, like you own 1/100th of the building, you don't have any of those rights. You can't do anything to the building. You're just along for the ride, getting 1/100th of whatever cash flow the general partner decides to distribute to you. And if they make stupid decisions, you're stuck with them. Right? You don't have any property rights. You're inferior in your economic rights. So owning shares of a REIT to get property for 100 years, not a great idea. And that leads us to the problem of securities. What is the problem of security? So you have some money, you invest it in Apple stock or Amazon or Facebook or Google or a REIT that owns a building. The dilutive problem with securities is there are risk factors. First of all, there's a management team. They're going to take 1% every year. They're not doing it for free. They're charging you to manage the company or the building, right? And if you're lucky, that's only 1%. You want to see that in action? Just go look at any ETF. The ETFs charge 90 basis points. If you want to put money into a Bitcoin, BITO or whatever, they'll charge you 90 basis points just as the management fee. So about 1%. What's the cost of 1% over the course of a lifetime? An infinite duration asset, you would basically multiply it by 20, 25. So it means that when I charge you 1% to manage your $1 million, I'm taking 20% of your money. Okay. I'm taking 20% of all your wealth to charge you 1%. So that's only the first problem. It turns out that when you run a company, you also have the risk of labor, right? Your company may unionize. So you've got labor expenses. And what happens to the equity value when the company unionizes? Well, the union just takes all the profits, and the equity values of those companies start to trend towards zero. So labor is another risk. The third risk is your competitors, right? Your competitor may come up with a better product and you end up like Yahoo squeezed out or AOL squeezed out by Google. Well, then your stock's going to zero, right? I mean, how many companies actually had a competitor? Xerox, Kodak, world's full of great companies. Where are they today? They end up getting squeezed by competition. The fourth issue is technology. You may just get obsolesced, right? Maybe you own natural gas fields or oil fields and someone creates nuclear power plants and they don't need your oil anymore. Or maybe you sell the world's greatest chemical cameras and people don't need cameras anymore. They have digital cameras. There's always that kind of risk from technology. And then there's execution. Maybe you just don't ship the iPhone 47 to be that good, right? Maybe the iPhone 13 is good and the iPhone 15 is not good, right? And the world's full of examples of that, like Firestone tires or something, and I ship a tire and the tire blows out, and now people stop buying my tire. Or New Coke. Remember New Coke is a product launch that didn't work out well. So when you're investing in a company, you're not just getting a pure investment. You're actually getting an investment in an asset, but you're getting hammered and diluted by force majeure, by bad weather. You might get a war. You might get a tariff or a trade war. Like we just decided to put a tariff on all Chinese imports. Oops. If you had a factory in China, what happened there? And then maybe you get a real war where someone just impounds your ship or blows up your factory. That happens too. We have real wars all the time. So what's the return on the S&P index? 7% a year. What's the monetary inflation rate? 7%. What's really happening? Well, all these companies, they're just barely holding their wealth. And so what would happen if I got rid of all those risks? What if I could buy a product that was never going to obsolesce, that's good for 1,000,000 years? What if there was no management team and they work for free, right? What if the product is run by computer programs that don't charge a fee? What if there's no labor? What if it's a digital product, so there is no chance to block it via a trade war or destroy it via a real war? What if it was an indestructible, immortal, incorruptible product? When you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network, or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world in 10 years, 20 years, 100 years, 1,000 years, 10,000 years? The product's not obsolescing. It's 1/21 millionth of everything. You see, the iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles. Maybe you won't need televisions. Those things can obsolesce, but will you want 1/21 millionth of all the energy in the human race? Probably. Like the whole point of pure energy, right? Einstein said energy can neither be destroyed nor created. You can just transform it, right? It's a pure idea. And it's an idea that doesn't have competition because of the Immaculate Conception. There's one Bitcoin. There's one network that was created by a nameless, anonymous figure, Satoshi. And Satoshi gifted 1,000,000 coins to the universe, never ran an ICO, never kept anything from a pre-mine. And the network now is just owned by the people. So how do you actually compete with that? It's hard to see how you compete with a pure thing like that. So it's a digital monopoly with no labor risk, no war risk, no product risk, no execution risk. Now, there is execution risk that takes place. So you have to set up Bitcoin miners. And if you set up a Bitcoin miner in China and they shut down Bitcoin mining, the miners lose money, but you don't lose money as the holder, right? So it's like the perfect monetary franchise. All of the work to improve Bitcoin is done by the miners, by the Bitcoin device builders, by the Bitcoin banks, right? BlockFi and Celsius can fail, but if you're holding Bitcoin in cold storage, you don't fail, right? The hardware company can fail, but you don't fail. And so if you study business, let's take McDonald's. McDonald's is a great business, but the reason they're a great business is so they don't really take that much risk. All the franchises take the risk. And so it's possible for every restaurant to lose money in the McDonald's chain, and the McDonald's Corporation still makes money because they've laid off that risk downstream. Other people risk their capital. So Bitcoin is kind of like this viral ultimate banking monetary franchise where banks will take risk, miners will take risk, individuals will take risk, companies will take risk. When the risks pay off, the Bitcoin holders benefit. And when the risks don't pay off, the people that took the risk pay the price, but the Bitcoin just continues. It's very anti-fragile. So coming back to your question, right? How's the middle class family benefit from this? Well, Bitcoin represents pure digital property, global property. It doesn't have the dilutive elements of a security. It doesn't have the dilutive elements of a currency or a credit instrument or debt instrument. It doesn't have the dilutive elements of property, right? You want to buy a second apartment in Airbnb? Okay, well, fine. Someone may move into it and trash it. You may have a renter that doesn't pay the bill. You may get rent controlled by the city. You may actually have a tornado hit it and trash it. You'll probably get a property tax on it from the city, maybe from the county, maybe from the state, maybe from the government. If you ever have to leave, you can't take it with you. And at some point in 100 years, the thing is probably going to have to be completely rebuilt and renovated to be usable again. So property's not a great long-term store of value. Credit's not a great long-term store of value. They're not scalable. You can't buy $437 of an Airbnb apartment every 2 weeks. So Bitcoin offers you apex global property. Theoretically, if the S&P index yields 7%, there's no reason why Bitcoin shouldn't appreciate about 14% in that environment. I think you get about a 7% real yield over the course of 100 years, whereas S&P index gives you 0% real yield. The best you can theoretically do with real estate property is maybe a 2% real yield if you're just really good at it. But there are just so many risks. Will your grandson or granddaughter be able to run the family property portfolio no matter what country they live in? And are you sure that any of 10,000 politicians aren't going to pass a law to destroy your property values sometime in the next 100 years? Think back from 1900 to the year 2000. And now imagine that you own a bar of gold in the bank in your city. What's the likelihood that you still have it 100 years later? Imagine you have a building in a major city in the world. Imagine you still have it 100 years later. Would you want to own a building in Russia, in Moscow, in Kiev, in Tokyo, in London, in Paris, in New York? Where would you want to own the building? Where would you want to own the bar of gold? It turns out that everywhere in the world, the gold got seized. Maybe you might have got by in Zurich, Switzerland, but everywhere else you lost all your money. Every bank failed. Every currency failed. So your best bet is maybe you own property that they can't make more of. If you're lucky enough to own, if you owned a piece of property on the Gold Coast of Florida for 100 years, it went from $100,000 to $50 million. Good, but the property taxes on it probably offset the capital gain from it if it was residential. So the only way you could have actually made money owning property is if you own commercial real estate and you generated a rent on it in excess of the taxes and the insurance and the depreciation and the maintenance. It's not easy to do that everywhere in the world. So Bitcoin represents property rights, or the right to purchase perfect property that is maintainable, right? It's low cost to maintain. It's indestructible. The rain doesn't melt it. Tornadoes don't destroy it. And it's scalable. You can buy it with your weekly paycheck. So it's liquid. You can sell it. Try selling 1/100th of a building. Not so easy. You want to mortgage the building? The building in Kansas City, you could mortgage to a bank that deals in Kansas City real estate. But if you're Turkish and you have a building in Istanbul, there's only just a small number of banks in the world that give you a mortgage on that. The mortgage will be in lira. The lira is losing 30 to 40% of its value a year. You got a problem. So Bitcoin represents global digital property. You can take it anywhere on earth. You can hold it for 100 years. In theory, you can hold it for 1,000 years. So you can take a very long view. And how many banks will want your Bitcoin? Well, you see what's going on right now is there's a French bank that wants to custody Bitcoin. There's a German bank that wants to custody Bitcoin. There's a Singapore bank that wants to custody Bitcoin. The banks in the UAE are getting into the business. The banks in Spain are getting into the business. The banks in the US are getting into the business. Right? And on the other hand, none of those banks want to give you a mortgage on your house in Arkansas. Only a local bank in Arkansas is going to get into that, right? So Bitcoin represents a pure economic asset. It doesn't have the liabilities that come with securities and other forms of property and other commodities. And it's simple. And that's why it appeals to the middle class. I don't have a better solution for you if you're a working person on a salary and you want to take control of your own economic destiny. If you're going to hold your capital, hold your investment for 10 years, then Bitcoin's a great idea. I'd say the minimum is 4 years. Bitcoin's 100,000 right now, Dave. No one's ever lost money buying Bitcoin. No one's ever made money if they're short Bitcoin right now. So if you're looking for 4 months or 4 weeks or 4 days, you have anxiety. If you got 4 years, you're okay. If you have 10 years, you're going to look like a genius. So here's an interesting thing. We are now at an inflection point. We have all the information to know Bitcoin is winning, and yet the majority, 99.8% of the capital in the world, still pretends and acts like it isn't. Most is still oblivious. You know something the rest of the world has not yet acknowledged, and yet it couldn't be clearer to all of us in this room. There's a monetary revolution afoot. A revolution in economic thinking. It's spreading everywhere in the world. It's fueled by the digital transformation of the capital markets that you see manifested in all of these companies and all of these securities and all of this Bitcoin activity. And it's going to be accelerated by explosive financial innovation. That innovation is surging now. You can see it everywhere around us. Every single company is thinking, how do I integrate? What am I going to do? So the revolution is afoot. The world is bullish on Bitcoin. It's being adopted faster and more aggressively by governments, by banks, by corporations, by investors than nearly all of us thought a year ago. So of course you're bullish, I'm bullish, but the point is the governor of Texas is bullish. The point is the president of the United States is bullish. The point is people you don't know in places you've never been are bullish. This is extraordinary. And I take a moment to go back to someone that was bullish when none of us were here, when none of us had this information. January 10th, 2009, the network launched technically January 3rd, but it was kind of clicking away by January 9th. And the next day, a certain genius estimates that Bitcoin could be $10 million a coin. And this is so humbling. It took the rest of us 16 years, $2 trillion in order to come to a conclusion that, yeah, this is going to happen. Inflection point, ignition point, escape velocity. When a nuclear reactor comes online, when the chain reaction starts up, we call that criticality. Bitcoin's reached criticality. The network has come to life. The work's done. The power's flowing. And there's no off switch. Satoshi's fire is now unstoppable. The network is unstoppable. Satoshi's point is the Schelling point of global money. We can now see, you can see, I can see, the rest of the world is beginning to see that in fact there is an inversion and there's a transformation. This network doesn't need me anymore. This network doesn't need anyone anymore. It's going to continue to grow and no one can stop it. And so with that, with the help of all that information, I'm going to now share my Bitcoin prophecy. I think we're going to be $21 million in 21 years. It's a very special time in the network, maybe the one time in the history of the network where you look out 21 years and you see 21 million. Specifically, I expect 21 million coins at a $21 million price in 21 years, and people ask, how's the network going to grow? It's going to be growing at 21% in 21 years. The volatility is going to be 21. The only number you need to remember is the number 21. And what does that look like? Well, that looks like 28.5% from here. Not that different, slightly less than 29% ARR. But the path to 21 million, it's not going to be simple. It's going to be volatile. And so you're going to see a volatility. It's going to damp over time, but you got to be prepared for the volatility, for the surges and the drawdowns, the good days, the bad days. This is Bitcoin's annualized return looking back a decade, looking forward 2 decades. And you can see that The network was growing faster when it's small. That's totally rational. It's now in the mid-50s. What do I expect? I expect it will continue to grow exponentially, but as it approaches hundreds of trillions of dollars, it will decelerate to the point where it's growing about 21% a year. Now, how does that compare to the S&P? It'll be growing faster. In 20 years, it's still going to be the best idea. It's still going to be the most lucrative capital asset a company can hold. It's still going to be durable, vital. There will not be a better investment in the year 2046. And I think it's very important to understand that Bitcoin's trending toward the performance of the best capital assets in the world, in the conventional world, which are like, Mag 7 digital monopolies mixed into an index. It's trending toward it, but it will never reach it. And it will never perform at that level because it's always going to be better. It's always going to be more useful. It's always going to be less risky. It's always going to have the counterparty risk of a company stripped away. There's never going to be a CEO to subpoena. There's never going to be a labor force. There's never going to be the challenge of a supply chain. It's never going to have a tariff on it. It's going to be pure digital energy, pure economic energy. By then, it will be moving at the speed of light on layer 2s, on layer 3s. It'll be moving 10 million times a second. It'll be trading between billions and billions of nodes and billions of other nodes. There's going to be nothing else to compete with it. It will be the most valuable thing, performing the best. You're not going to want to sell it in 21 years. You're just going to wish that you had acquired more of it. And here's the volatility. Looking back, volatility. Okay, it's 80, 90 vol, 100 vol. Today, it's the mid-50s, the mid-40s. What do I expect? Well, this is kind of very straightforward. The volatility is going to also dampen as the asset class grows, as the structure matures, as the options markets come on, when the banks embrace Bitcoin and they'll give you a loan, the volatility will damp. When it's fully banked, when it's fully optioned, when the mainstream investors are invested in it, the volatility will damp. But the volatility of the S&P is the VIX, it's 16. Bitcoin's going to be 21. Bitcoin's always going to be more volatile because it's more useful, because it's more pure, and because it's more leverageable, because you'll have more capabilities and you'll be able to do more with it everywhere in the world. It will be raw economic energy. That's okay. Volatility is vitality. So now you have a future, $21 million, 21 ARR, 21 vol. This is the important part of the presentation. What will you do? First of all, you have a 21-year head start. You know something 99.8% of the capital in the world does not yet know. You know that this thing is unstoppable. You know that everybody needs it, and very few people understand it. That's the most valuable information in the world. If I told you Bitcoin was going to 21 million tomorrow, that's not useful. It's too late. I'm giving you something much more valuable. I'm giving you 21 years to leverage that information while everybody else is oblivious, while everybody else is afraid, while everybody else is distracted. You can do something. If you build the right machine, build a money-making machine for yourself. If you build the right machine and you plug it into the Bitcoin network, it will grow stronger every day. It will grow stronger every year. It will compound extraordinary wealth. Extraordinary wealth. And you will change your world. You have a once-in-a-lifetime opportunity to change the destiny of everybody in your bloodline, to change the destiny of your community, everything you hold dear, to change the political course of human history. You can do it. You have the opportunity because you have the most valuable information in the world. And the question is, how are you going to do it? What is your Bitcoin strategy?